Hey there, good morning everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Friday. You guys made it through the week, the 20th of November 2020 in San Antonio, Texas. Hope you guys are having a great day. Man. So anyway, sorry guys, I'm going to try and make it through this whole stream here. My eyes are just shot with the allergies and whatnot. So if you see me doing a lot of this, you'll know what's going on there. Anyway, hopefully you guys are doing well. Trading safe out there. Bitcoin keeps edging higher, so we'll take a look at that. Is it going to break the all-time high? Or is it going to break hearts and, take a deep drop before then? We'll kind of discuss those possibilities there as well. I mean, I can see both arguments for it. My bias remains to potentially see a good drop before the all-time high. But again, could happen after it. We'll see how it plays out here. OKX is back up and running supposedly now, or is about to be. And so, is that gonna increase inflows and whatnot and selling on exchanges? OKX, kind of like Bitfinex. Oh, sorry guys, got guys doing lawn work outside. But Bitfinex and OKX being big exchanges for miners and whatnot to sell. One of the other issues miners having right now in China is supposedly an inability to sell. Yes, it looks like we're getting driven up by spot, which is fine, but would we be where we're at if not for the fact that miners can't really sell what they're supposed to be selling, or what they would normally be selling due to what's going on in China right now. So, and if something happens with that, if something changes or there's or they find a way around that all of a sudden, are we going to see a sudden, huge bit of supply coming on? Because, the miners can't pay for their electricity and everything in Bitcoin. They have to convert to fiat and then use that money to pay their expenses. So, I think a lot of these things are things that, people aren't thinking about. They're all FOMOing in right now. And, of course, none of that says price can't continue up. This is one thing I keep trying to explain to you guys. Price can still continue up. But if you call yourself a trader and you're not paying attention to these things that are going on, are you really a trader, or are you just somebody who wants to wear the label of trader, but yet you're just throwing in money just because price is going up and you're emotionally unstable? I don't mean it in the worst way, but I do mean, well, maybe in the worst way for finance anyway. Emotionally unstable just meaning that you're emotionally tied to the bullish side of it because of the FOMO and whatnot. And I make it a point to say that, guys, because if that hurts your feelings that I say that, then you probably shouldn't be trading. Because the reality of it is, if you're trading based on FOMO, you're going to have profits for a bit, and you're going to see them evaporate like that because you're not going to know what you're doing. And you're going to believe everybody else that's FOMOing saying, oh, buy all the dips, which is great until it's not anymore. Remember, the trend is your friend until the end, right? That means, you buy in the direction of the trend until the trend changes. But if you're a trader or if you're just somebody in the market, and you don't understand what you're doing, how do you know when that trend has changed? Do you know what makes the trend change? What says that it's changed? All these things. And, most of the time, most of the people that I talk to have no clue of these things. But yet they call themselves traders. And then they get offended because I suggest these things and I talk about these things. And that's the problem, guys. If you're going to be a trader, you can't be offended by somebody mentioning, hey, listen, you've got to be careful because of this, this, and this. If you're getting offended by that, you need to check your emotions. I mean, or don't and lose money, because you will lose money, period, if you're not. Again, guys, whether you do well or not here, I'm going to still do what I've done. Now, I would hope you'd pay attention and get what you can as far as, bits of information and knowledge and whatnot from what I do here. But at the end of the day, you know what they say, you can lead a horse to water, but you can't make them drink, right? And if you're fortunate enough to be in the market long enough to understand that, oh my God, most of the things you've done since you've started are wrong. If you remain in the market long enough to get to that point, the odds are increased greatly that you're going to change what you're doing and figure out how to do it correctly. Most traders don't make it that far, though. They leave offended. They think everybody duped them and screwed them out of their money and whatever. And it was really just them not knowing what they were doing. So, hey there, guys. Who's here already? Let me see. Satoshi Badger's here. Casper's here. Nevlusian. What's going on, guys? Rossmark, what's going on, man? Says thanks for your videos. Appreciate your insights. Hot takes have been phenomenal, mate. Keep it up. Oh yeah, man. I appreciate that. Man, I'll tell you what, guys. If you're not in our tier 3, getting access to our hot takes 3 times a week, you don't know what you're missing. But I'll tell you what you're missing. We had a setup for Naked, N-A-K-D, on the stock exchange here recently. Look at that right there. This right here, guys. Look at this. This happened this week. This is just in a couple of days. That went up there almost 400%. Easy trade, guys. We're doing this stuff all day, every day. So, definitely join us over here at howtotradetowin.com. We've got, you don't have to do tier 3. You can do the lower levels, tier 1, tier 2, tier 3. Choose what you want. But tier 3 gets access to the hot takes and chart requests and all this extra stuff, as well as a weekly live stream that we do, giving them techniques and tricks and deeper education on different parts of trading. We do that every week on Wednesdays. And then you get access to all those. So, I mean, if you're tier 3, you got well over 30 hours of educational material already, and more coming every week. You get over 50 setups a week. You get 20 assets a day that we update daily and intraday across all the markets. Gold, silver, oil, natural gas. Gosh, man, they are loud out there, aren't they? I'm sorry about that, guys. They should hopefully be done before too long here. What else? I'm sorry, where was that? Oh, gold, silver, oil, natural gas. We do the NASDAQ, the S&P E-minis. We do the Dow Jones. What else do? We do Euro USD, USD Canadian. We do the Aussie dollar against the USD, and we do the USD against the yen. A couple of times a day we do updates on those pairs. Gosh, we do a number of cryptos every day. Litecoin, Ethereum, Link, Tezos, BSV, BCH, XRP. Yeah, so we do. I mean, you get those every day as far as that. By the way, you get those assets, those daily and intraday updates as a tier 2, and you get a lot of the education as a tier 2 as well. But tier 3 is where it's at. It's got everything. If you're in tier 3 and you're not making back your monthly membership, honestly, I don't know. I don't know what to tell you. It's just, as Ross Marks said there, just being absolutely phenomenal. Just money. It's a money printing machine right now. So we'd love to have you there anyway. Hey there, LG. Good to see you. Hey, Greg. Omar's here. Who else? DJ's here. DJ Data. Let's see. Who else is here? GT checking in from Bellingham, Washington. Good to see you checking in again. Mads, what's up, buddy? Hank is checking in. He says, guess my 18,000 limit was too modest. But then again, my dot and link are doing A-OK. DXY refusing to crash further. That may be worrying. Yeah, we'll talk about that again today, too. Bigger picture. I think it's just rotational out of the really overly bearish side that has been with the dollar for so long. I think they're just rotating out of it, and that's why we've got all that sideways for the last few months. So I think we still got a little bit further downside, but I think it's going to be really limited. I think most of that rotation is just about done. It's having a lot of trouble pushing lower, and that's usually, a sign that bottom's pretty close. So we'll check it out. Hey there, Block Tech. Always appreciate you checking in. Crypto Mowgli says, good evening, Europe. Morning to the U.S. Good to see you, my friend. Oh, and I see you sent me a message there. I will check that after the stream here, too. So just wanted to give you a heads up on that. Anastasia, what's going on? Good to see you. Anastasia's been around us for quite a while. Says, good morning. Says, morning. Agree, emotional stability is super important. It is the most important thing, guys. When you're trading, keeping your emotions in check is the absolute most important thing you can do for yourself. Because you could be perfect at figuring out Elliott Wave and everything, but when you actually start putting money in there and trading, I say Elliott Wave because it's got the, the definitives about, invalidation and validation levels and everything. But if you don't have your emotions under control, you will not follow through. You'll find reasons not to get out when your rules say to get out, or you'll get in before your rules say to get in. And that's how you lose money, guys. So get those emotions in check for sure. And one of the best ways you can do that, the easiest way to do that, is learn about risk management and get that figured out. If you've got your risk management figured out, it's a lot easier to keep the emotions under control, because the emotions creep in when you have a lot at risk. But if you know that you're limiting your risk to a very small loss, if you're wrong, and you're going to be wrong a lot, it just makes it, not as easy to be emotional about it. It makes it a lot easier not to be emotional. Let's see here. Let me see. Ross Mark says, you're right about emotional trading, but may I also point out that it works both ways. I personally was guilty of emotionally behaving like a perma bear lately. Yeah, I mean, but that's emotion. Whether you're euphoric or whether you're depressive, either way, it doesn't do you any good. And people are like, oh, well, if you're, if price is going up and you're emotionally euphoric, that's okay. No, it's not okay, because you're not going to understand when to get out. Again, guys, one of the easiest ways you can do, another thing you can do to help yourself with emotions, is stop using the words bull and bear. Stop using the words perma bull, perma bear, stuff like that, because those have negative connotations to them. And if you use them, again, subconsciously, it makes you behave in a certain way. So don't do that. Again, another thing on the candles, I never use red and white or red and green candles. Usually black and white, right? That's what you should do, especially if you're a new trader. Forget all the other fancy colors and everything. Use black and white candles. Because if you do, and same thing with your volume, use all black on your volume. Because when you bring in the red and green, it creates emotional responses to what's going on. It sounds silly, but I'm telling you guys right now, these are the little things you can do to help rein your emotions in control, whether your emotions are up or down. So yeah. Let me see here. Hey there, Satoshi Ray Bitcoin. Good time to see you checking back in, man. Candle Shepherd says, I'm actually driving, so I'll just listen. And of course the car is stopped while I'm texting. Glad to see that. Don't want you guys texting and driving out there. Life's too short, man. It only takes one mistake to end it, right? So let's not take, chances that we don't have to take. Let me see here. Hey there, Althmain, Telluride. Good to see you. You don't hear the landscapers at all? Telluride? I don't know how you don't, man. They are so loud. I keep saying, I'm looking to buy some property finally, coming up here next year. I've kind of put it off since I moved to San Antonio because of, expecting the markets to come down, because they've just been kind of topped out. And so I've been leasing, and, I figure I'll like soundproof my office or something at that time. And that way I don't have to hear anything from the outside coming in. Oh man. Let me see. What's going on here? Chris Stevenson. Good to see you. Glad to have you checking in. Patrick as well. Clarkman, what's going on? He says sunset time over there. Am I a bad person for wanting the market to tank? No, you're just human. You're just human. Right now, with all the, all this kind of sideways and kind of pushing up and pushing down, make it a definitive move to the downside after such a long upside makes it an easy trade. Definitely nothing bad about that. Let's get rid of this guy right here. What an idiot. Sorry that you guys have to see them coming in there with their little, trying to get people to get in and buy stuff from them or whatever. I'm sorry for that, guys. Let me see here. Dennis, what's going on? He says, very close to all-time high. It is. Hey there, Ahmet. Good to see you. He said the 1 hour candle rule worked perfectly today. Great thing. Yeah, that's something I taught Tier 3 last week. Or this week. Well, again, that weekly training that we do. So he's talking about a technique that I taught him this week on Wednesday that they're using right now to make money. So there you go, guys. It works. Let me see here. Let me go ahead and put this. By the way, so just join us over at howtotrade2win.com, guys. Seriously, would love to have you there. Do everything we can to help you learn to be a better trader. But always keep in mind that at the end of the day, you have to actually put forth the work. You can't half-ass it. You can't kind of just goof along a little bit and try something for half a day or a couple of days and go, oh, it doesn't work. You have to put in the time, guys. Nothing in trading is going to come overnight. There is no trader out there who's been a great trader from day one. Any great trader, any trader that's been in for 5 years, 10 years, 20 years or whatever, they've got stories about how it took them years to get going. So don't think you're special. But also don't think you're terrible if you're not getting it right immediately. Don't think that you're really a terrible trader or that you're never going to get it if you don't get it in the first 6 months to a year. On average, it takes 2 to 3 years of consistent learning and proper execution for people to become consistently profitable traders. And if 2 to 3 years, if you go and you go, oh man, well, I don't want to wait 2 to 3 years. Well, again, what is it that you're trying to do? You don't learn anything else. You don't learn any other new skill, profitable skill in a short amount of time. They always take time to become better at, to become good enough that you can make a living at them, right? Stop thinking trading's any different, guys. It's not. Just because you can get into an exchange, because you're 18 and you got a few bucks and you get into exchange doesn't mean that you're going to be profitable anytime soon. And again, one of the worst things you can do is be profitable right away, because then you start believing this nonsense that you actually know what you're doing. And I'm going to tell you right now, without trying to offend you, but if it does, that's on you. You're not special. You're not going to be, if you're profitable right away, it's not because you're good. It's because you're lucky. And luck is always limited. All right? Make sure you guys get these things understood. Wazobia Dollars, good to see you. Jonas, hello. Good to see you as well. Let me see here. You just wish there would be a button to close emotions with a click? Yeah, me too. Sure as heck would make life easier, wouldn't it? Let's see here. Satoshi said the last time that monthly touched the previous all-time high, it retraced approximately 30% before closing above. Now that would be 13.9, big level right here. Yeah. Let's kind of jump in here. So this morning, yesterday, I updated Discord a few times, and we were looking at some possibilities. Originally we were looking at a triangle, and then I was looking at the way it was playing out and said, well, I think maybe we've got an A and a B, and then we've got this C coming down. And then yesterday evening, after we had this price action here, I said, okay, well, it looks like we're doing this triangle. And I said, if we're doing the triangle, then we've got an A and a B. And then C would have to be down here. Oh, I'm sorry, A, B, C down here, D, and then E. And that's because, excuse me, when you look here, you have an ABC down and an ABC up, and then it goes down. Well, if it's an ABC, like for one of these larger ones here for the triangle, the C would have to be, this would have to be C, and it would have to be 5 waves, but this is only 3 waves. So if we look at this right here, this wave D right here, which is this, if we look at wave B of that, because you got A up, B is an expanded flat. So ABC down, ABC up, and then 1, 2, 3, 4, 5 down for C. And so that's how you get beyond that. So that gives you then A, B, C, D, ABC down here for E. Now, from that, this morning, I gave him an update, before we were on here. And I said, it looks like what we have here is a 1, 2, and then a 1, 2, 3, 4, 5. So a 1, 2, 3, triangle 4. And then we had this 5 pushing up, and that's what we got here. I was actually looking at probably about $50 higher, but it didn't quite make it there. So here we go with this pullback here. Now, here's the thoughts, guys. First of all, and I don't think this is what's going to happen, but technically, we've got 5 waves up above this swing high here. So technically, if this is a triangle, that means this is a wave 4. It means this is a 3. So 3, 4 is a triangle. That means this is 5. All 5 needs to do is do 5 waves and close above the wave 3 swing high. Well, we've got that. So technically, wave 5 is done, or this wave right here has done everything it needs to do. It could be complete. I don't think it is. I think we've got some further upside. So this may just be one of 5. Okay? 1, we'll work on 2, 3, 4, 5. But how do you know? Well, the way you know is if you get a pullback from here below this wave E termination point right here at $17,712.91 here on Bitstamp. If you get down below that, that says this is done. And if this is done and this is 4 here, that should mean that this is likely done. this move up. Now, whether this is, terminal end to the move from March, 5 waves up, or if it's just wave 3 of 5 coming from the March low, either way, you should at least then expect a significant pullback before it continues up, for wave 5, or, even further pullback for wave 2 and then wave 3. So right now, all you're interested in right now, if you want to know if this is the top or not, is does it go below this wave E swing low here? Again, if it does, it means most likely this is the top. For right now, at least locally, again. Could be a 3, we have a 4, and then a 5 up. So just some thoughts on that. But before that, we look at this as probably 5 done here. So what I'm looking for is a decline down toward this 61A here around 18,135, or even the 70.5 at 18,039. That gets you right around this previous wave 4, the lesser degree, this triangle here. So if this is one and done up, I'm looking for wave 2 to come down to 18,040 to 18,135 kind of area right here. That's what I'll be looking for. And in that case, if you don't get, well, I guess it wouldn't be an ending diagonal. So, generally what we would look for, let's say it gets down to 70.5. That'll give us lower levels there. We would look for at least, a 1 to a 3 up here at 19,835. And look at that 5 right there at 20,259. It gets you right at the R5 pivot on the 1 hour. I think that's potentially a pretty good idea, looking at it going up there. Now, there's no, again, this is just if wave 2 pulls back here, and then wave 3 goes where we usually expect it, wave 4 where we usually expect it, wave 5 where we usually expect it. That's if we do that. Wave 3 and wave 5 can be shorter, and it can stop before that. You can just get this really short wave, last wave up kind of thing. But right now, I find, you're always looking for confluence, guys. And this count, and this being a 1 and a 2, gives a lot of confluence with the R5 pivot. Then you run all the pivots up here. And this is the 1 hour and 4 hour pivots right here. So it makes a lot of sense. So, again, I'm going to watch this pullback here. Do we get the pullback? Right now, I want to see the first thing is, do we get a pullback below this candle's swing low right here? So this is 18,529 and 39 cents. If we get a pullback below that, then again, looking at 18,039 to 18,135. Now, it can still pull back, 78.6 or whatever, but generally I look for the 61.8 to the 70.5. And most often, to be honest, I really lean toward the 70.5, especially here on Bitcoin because of the algos. They've really pushed it beyond the 61.8 more often than not to the 70.5. So if you don't have the 70.5 on your fibs, put it on there. Start watching it, all right? So again, that's what we're going to watch. We're going to watch this swing low here at 18,529 and 39 cents. If we go below that, I'm going to assume that we're headed down here to that area. If we can get a reversal out of that, I'm going to look for wave 3 to potentially get right there and wave 5 to get right there. Now, it's possible you could spike up even more. Again, once you hit the all-time high, guys, and really in this area so close to it, anything can happen. Anything can happen, guys. Everybody getting excited about the all-time high. I could definitely see dreams being crushed. Huge supply coming in before it even hits the all-time high. I could definitely see a case for that. Because you've got so many people that are longing. You've got so many people longing these areas here, here, here. And it makes, you just dump in some supply and it makes it an easy run down here because everybody's going, here's what people are thinking, retail. Retail, because retail provides liquidity. If you don't know that, you just learned. All right? Who controls price action? Your other time frame traders, your positional traders, your smart money. What does that leave you? That means if you're not paying attention, you're providing liquidity. You're giving them the ability to move. All right? Always remember that. You are nothing in the market other than liquidity. So that's why you have to work extra special hard to learn how the markets are working and why things are going like they do so that you don't prove that out and you become all that. All right? That's the last thing you want. You don't want to be liquidity. All right? I cannot impress upon you the importance of that understanding right there. As a retail trader, you are liquidity. Do everything you can not to be. All right? So again, all these long and in here, potentially, retail getting in there. And so you send a large bit of supply down there. Retail's coming in over leveraged because they're thinking, man, if this pops through the all-time high, it's going up to 25,000. And all of a sudden in their head, they've already spent their money. Man, if I put everything into this and I put it at 30 or 50 times leverage, man, I'm going to be so rich. And it's going to happen like that. I'm going to get rich overnight. I mean, really, that's what they're thinking. They're being emotional. Don't be emotional. And I can see them taking advantage of it right there. And because of the high leverage, it doesn't take far movement in the wrong direction to send them out, either to liquidate them or to get them scrambling to cover. And in either case, all you're doing is adding more shorts, adding more, your market shorting, which just sends price down even harder. And it hits more pockets of over-leveraged shorts, sending them down even further. And it becomes this cascading shorting effect. So, don't think for a second it has to go above that all-time high, guys. Because when you start thinking that's what it has to do, that's when you just go ahead and just write on your forehead, liquidity. Make sure you put a mirror in front of your monitor every day so you can see that right there on your forehead, all right? Don't be liquidity. Let me see here. So if we zoom in here real quick, let's look at a smaller time frame here. So if we look at what's going on here locally, I'm thinking we may have a 1, 2, and a 3, 4, and a 5 here. So I think this is this is a 1 on the way down. I think this may be locally the top for the moment here. And we're getting that pullback, like I said, at the 61.8 or 70.5. Notice it hits this demand structure right here. Right at that EQ area, guys. Right there, look at that. Let me zoom in there for you. Look at it, just right below it. Yeah, more or less at it. Actually, if we do this correctly, there we go. Get it below those swing lows right there. Look, it hits it exactly. It's this untouched demand here. By the way, if you want to learn how I draw my supply and demand structures, we covered that in one of those Tier 3 weekly training things. So join us, Tier 3. Get in there. Go through the previous Tier 3 weekly trainings. You'll see it in there. Anyway, I think we got basically a 1, 2, 3, 4, 5 here, which means, we're looking for this move up here toward, again, I'm always interested in the 70.5. That's 18,745. We may just get right here to the 50 or the 61.8. But from that, then, we'll be looking for the reversal down, getting you toward these areas. What you can notice here, let me see here. Let me zoom over here a bit. There we go. Let's see. So this is the structure here. Again, we're looking to get to this area down here. So if we can get up here to the 70.5 as a 1, 2, having things follow as they normally do, we'd get a 3 right here at about 83.16 and a 5 down here at around 18.216. So that would be an A. We get a B up, and we get a C down here, again, toward these lows down here. Notice there's this higher volume node right around that 70.5 area, right around that 18,030, 18,040 area. So that's what I'm kind of looking at the moment here. Again, want to see that decline down through that swing low there to kind of set up, okay, we've probably got this move at least down here toward this $100 range here. Now, again, I think there's further upside here, but as I said, this is 5 waves up. It could be done. So if it continues, if it does happen to continue on through this swing low here, then you definitely need to get your eyes looking lower. And you can start watching, this EQ right here, 17,137. This one right here, it's 16,738. The top of this range at 16,492, and this EQ right here at 16,094. I think it's probably enough targets right now to kind of keep things through the weekend anyway till Monday. But that's only if you lose that right there. As long as you're bouncing, prior to that and coming back up, there's a good chance this is a 1 and this is a 2, and then you got 3, 4, 5 still to go. Let me kind of catch what you guys are coming up to here saying. Oh my gosh, these eyes. Let's see. Guerrero says, I want to learn when to pull my Bitcoin in, when to put it back in. Again, that's a lot of stuff of what we teach, but, that's always different for every trader. A lot of times as new traders, you guys come, listen to people like me or others online, and you think, okay, well, they're going to tell me what's the best thing for me to do. Where should I be, buying and selling? The problem with that and what most won't tell you, because most of these people that you follow online, they don't have no clue about this, guys. They're just people that do a little trading, and then they want to tell you how they're doing it. But here's the thing. If you're teaching somebody to trade, you have to get them to understand that your situation and theirs are not going to be the same. If I find an area to buy or sell, it is most likely not going to be the best place for most of y'all to buy or sell. Because I am in a different position financially, wealth-wise, goals, short-term and long, short, mid, and long-term in both of those, as well as my risk aversion. You may have more risk tolerance, the time frames that I trade, that I can trade, the time frames I want to trade, and what you can trade, and where you want to trade, as far as time frames go. All these things work together to make you an individual, all right, as a trader. So if you're blindly copying somebody's buy and sell levels, you're always going to be upset because it'll never be good enough for you. You'll be happy with the profit until price continues up higher. And then you'll be like, man, you screwed me, man. I lost money. You didn't lose anything. If you locked in profit, you made money. But there's so much that new traders have to get through emotion-wise. Because guess what, guys? You don't know what you don't know as a trader and anything else in life. And so you come in and you constantly often blame, I'm not saying you guys, personally, I'm just saying as new traders, often come in and blame somebody that they're talking to about their calls for, tops and bottoms and, buys and sells and whatever, without realizing that the things that make them who they are completely different than what make you who you are. I am notoriously risk adverse, much more than most people. So I'm a lot more conservative. I pay a lot more attention to what's going on. And for a lot of people, at least until they've been in a while, that's too conservative for them. And so they complain that, maybe it took profit too early, or, maybe bought in too late or something. But what I do has worked really well for me for quite a long time because it works for me. I'm not interested in emotions in trading. I'm not interested in becoming a millionaire overnight. If I make, $10,000 in a day or something, that's just fine, right? Or $5,000 in a day. That's more than fine. Now, yeah, it's great if you make 40 or 50 grand or, whatever, 100 grand in a day. Those happen occasionally, but, my goal is not to, at this point in my life and in my trading, my goal is not to scrape out every last penny of every trade. I don't have to. I'm interested in getting the meat of the movement, making money, consistently locking in profit, and moving on to the next trade. But most new traders don't see things that way for themselves. And again, a lot of that's driven by emotion. They think they have to get rich overnight. They think, man, I'm only starting with $100 or $1,000, so I've got to double this many, many times as quickly as possible. And then you tell yourself, tell me if I'm wrong here, you tell yourself, if only I can get to this amount of money, then I'll pull back. I'll ease off. I won't be so aggressive. Right? Yeah, we all do that when we first start. No, you will. You will continue to try to be as aggressive. And the problem is you will get probably even more aggressive. Because then you start thinking, I can do this even better. And, again, it all ends up, it results in you losing money more than making money. The key to being a trader is consistently locking in profit. That's it, guys. It's not getting the highest, it's not selling the highest price, it's not buying the lowest price. It's consistently locking in profits. The one thing I hear from most traders, which is funny because the one thing I hear from most new traders is, man, I always screw up my sell. I don't sell when I should. I always think it's got a little bit further to go. So they're doing completely the opposite of what makes a good trader. But it's not easy to get out of these emotional things like that, guys. Just because I talk about emotions and say, you need to get them under control, you need to do all that, doesn't mean I'm saying it's easy. I know it's not. And you know what? Guess what? 25 years later, guys, it's still not easy. It's easier. But there's times when FOMO, you start feeling a little bit, maybe peaking up a bit. You got to say, whoa, wait a minute. No. But, after being in the market for so long, you have the ability to do that. If you're new to the market, you don't have that ability yet, which means you have to be extra serious about paying attention to it and noticing it and working hard to, work against that. Let me see here. Any idea on alt season? Yeah, those alts are looking pretty low at the moment. If I had to guess, you've probably got some pretty good alts opportunities really coming up soon. But until it actually happens, anything can happen, guys. But they are looking pretty low here. We got a lot of them, especially some of the older ones, kind of hitting all-time lows now. So they should be nearing an end, I think, of the lows overall. Hey there, Mechanic. Good to see you. Hank says, Ethereum just broke 500, so not expecting to crash anytime soon. Let me see here. Let me catch up. What's going on, LXT? Good to see you. Hank says, if you're not at the table, you're on the menu. That's exactly right, guys. There's a lot of these old trading adages and proverbs and whatever that, really, the longer you're in, the more sense they make. Do your best to understand them now, and you might be doing a lot better sooner rather than later, for sure. Let me see here. Slice says, same count, played the triangle, can't wait for the big drop, but not yet. Yeah, like I said, I think we've still got some further upside, guys. I only point out, this because, again, a lot of what I do here is teaching you guys and trying to get you to understand these bigger concepts and these more consistent ideas. And again, technically, 5 waves up and a break of the wave 3 swing high is all that's required for a wave 5. Every once in a while, you'll see these, you'll see something that goes like this. It'll go 1, 2, 3, 4, and then you'll get a 5 and then back down, right? And you get that 5 just barely above that 3, and you go, man, but it was supposed to be up here. Why is it down there? Because technically all it requires is 5 waves up and a break above that wave 3 swing high. So that's the only reason why I show you this here. But again, as I said, I'm not expecting to go down, but if it drops below that, that 17, 17,712 area right there, then, you're kind of, to me, that says that this is probably done. But again, even that doesn't mean it's done from the March low. It just means it's at least done locally. And so, of course, if you're in Discord, and that were to happen, I'd be updating you guys, if it's during working hours there. Sorry, guys. A little bit of a runny nose there. I know you guys don't want to know that. What can I say? I was born in, was raised in West Texas. I've lived all over the world, but West Texas is home. You can take the cowboy out of the country, but you can't take the country out of him, right? Can't take those boots off. Anyway, let's see here. Hank says he paid his bigger bills of 2020 with the profits made in Q3 and 4. Feels good. Always feels good, for sure. For sure. Never regret taking profit. That's right. Let me see here. Let me catch up to you guys. What's going on, Spiral Architect? Happy Friday, my friend. Crypto Girl. Brian Riley. Good to see you guys. Brian says if we make it through the wave 5 above the all-time high, it will probably be a huge bull trap, then dump. I mean, technically, that makes a lot of sense. Or, historically, the way markets many times work. Obviously, no guarantees, but, if you're not getting a big drop right before, you usually get a big drop right after. But, occasionally it does continue to push up. So just always be ready for what you don't think will happen. It's the best thing you do as a trader. Let me see here. Jonas says that bid on retail providing liquidity that I mentioned earlier, he says, was as sharp as it gets. That's how big moves are created. Exactly it, guys. Again, as retail, you goof around there and you think, that you've got some kind of big insight into what's going on with price. But the reality of it is your entrance in the market is liquidity that helps the bigger players move. And that's what moves the market overall. Not what you're doing, as an independent retail trader. So the key is to try and understand what the big players you're looking and doing at more than anything else. If you can do that, then it makes it a lot less likely that you're going to be liquidity. Let everybody else be liquidity, guys. You don't need to be it. Casper says, I've always been realistic about profits. Would never expect to make $1 million in a day. Maybe 999,999, but never $1 million. That's awesome. That's awesome. I love that. Traders need rules. They do. Let's see here. Data says, I still have my Excel sheet from 2017 where I had doubling the money for every week, planning 9 figures within 1 year. One day I'll make that wallpaper print out. All new traders do that too. They go in there and they're like, man, if I can just make this certain much every day, I'll get to this point. The problem with that is you put a lot of pressure on yourself that you shouldn't put on yourself because it makes you, remember, not every day is a tradable day, guys. Not every minute is a tradable minute in the market. You can go days without a good opportunity for trading. Again, you've got time here, you've got time sideways here. Better spent out than trying to guess the market here. And the problem with when you start doing the doubling thing like that is it gets you all excited because you think, man, that's nothing. I can do 2% in a day. It'll just take me 9 months. I'll get to $1 million from 100. But again, the environment isn't always conducive to a 2%. Not that the market doesn't move 2% in a day. It's the ability to recognize where that move starts. And so that's where the problem comes in. So don't ever do anything like that, guys. Don't say you've got to make so much every day or every month or whatever, because it just puts a lot of ridiculous pressure on you. Develop a system. Trading is all about systems. Develop a system. If you can develop a system that works for you consistently, so that you're consistently locking in profit, you'll be successful. It really is that simple. It's not easy, right? Let's see here. Ballistics, what's up? Says one of the triumphs of trading is controlling your emotions. It really is. It helps you out in life too. We tend to be, again, I think emotions are great because they make us human beings, but too much of emotion is not good. You don't want to be bouncing off the ceiling and, settling under the floorboards kind of thing, right? And kind of being back and forth between all that. You want to control them as much as possible, while still allowing you to have emotions enough to be human. Let me see here. Do you see a maximum upside potential of this run? Yeah, it'll be as high as it goes will be the maximum upside potential. Really, I don't know for sure. I think the 25,000 area is interesting. But I have a hard time seeing us getting from right here to 25. Doesn't mean it can't happen, but it means it's lower on my list of possibilities. But I do think that 25 area is interesting. 23.4 maybe is also kind of an area that I'm watching. But right now I'm much more focused on what happens locally here. Do we get a dump before the all-time high? Do we just pop above it and get a dump? Or does price continue going on? And that's going to tell us a lot more about potential tops of this current movement off those March lows, I think. So, yeah. Hey, Othman, he says, do you expect a big move this weekend? Oh, man, I hate weekend questions. You know that. The weekends are so crazy because, lower liquidity. So it makes it easier to move price around a bit. I think it could be possible. Personally, here's the thing. Personally, I'd like to see it. I don't know. Here's the thing. If we zoom out here to the daily, guys, let's do this right here. If we zoom out to the daily, TD sequential, as I've pointed out for our Discord members, was a TD9 yesterday. Okay. Now, what's interesting about this area here is you've got Let me turn this off here so you can see a little bit better here. You've got all this strong move up, right? All this strong move up. And you had a little doji here and it pulled back. And you had, this little bit here and it kind of went up and this little bit and pulled back. But you're getting to this much more long-legged doji here. And you've got this smaller doji here. And you're getting this move up. But I would, right now, this is the R3 pivot on the daily, guys. Here's some things to pay attention to. This is the R3 pivot on the daily. 18,865 here on Bitstamp. It went up to 18,824, so pretty close to it. It can be considered resistance, right? And the TD9 is right here. And so I can envision a scenario that makes a lot of sense wherein by the end of the day, price dumps here and we end up with either a very long upper wick here and this little small doji body toward the bottom, or even a supply spread candle here. I'm telling you, with the areas here that you've got these longs and and they're getting in over leveraged as it's nearing 19,000, if you send that supply down, it can really take it out quick, fast, in a hurry. And it'll move fast. It'll move fast enough that people don't have a time to react, which will cause it to drop even faster because they'll get liquidated, too highly leveraged. And then when they're finally jumping in there to start selling, they'll be buying it up. So if I'm looking at this and we had a sudden sell-off here, I'm interested really in this right here, probably right there around 14.6. That's my first place I'm really interested if there was a sell-off here on the daily. I think it's possible you can get a little bounce here at 16.1, possible. But I'm really kind of interested in this area, at least for a more, either a possible bottom if this is like a 13 or like a 3 and a 4, and we still got a 5 to go, something like that. Or at least as, an A and then a B and then a C down, or even a 1 and then a 2 and then 3, 4, 5 for an A. Depending how you want to look at it. To me, this right down here is kind of like your do or die point there. If you're getting down below that, to me that says we've got a much, much larger correction happening. And we might be just completed one up all the way from March lows. But as long as you can get some kind of bounce in that area, I think it gives you some hope for at least this temporary pullback. I think, if this is a 3 and then we have a 4 coming back, I think we're going to drop at least 1,500 to 2,000. So if that happens from where we're at, that's at least 17.3 to 16.8. Where does that get us? See, 17.3 just gets you right here. So again, if that's a 3, 4, and then you get a 3 and a 4, depends on how you're counting that. So then 16.8 kind of gets you again right in this area. That's kind of no man's land. Yeah. So I'll be looking for a bit lower maybe on that. So I think really right now it just kind of depends on what's going on at this local area. I think if you're trying to think too far out from it right now, you're doing a little bit too much work that probably won't reward you too well. Because so much can happen between where we're at and that all-time high. And so I think it's important to pay attention there. Now, as far as the daily goes, we're just now popping into overbought here on Stochh RSI. Daily RSI, of course, is well overbought there at about 84. What's interesting to me is MFI. I had a member recently start asking me about MFI, so I figured I'd add it on here for a while, and we'll continue to watch it. But MFI, whereas RSI is an indicator that's based on the price action, the highs, the lows, and how fast it moves, MFI also adds in volume to it. And so you really need to pay attention when MFI is showing a divergence with price. And as you can see here on the daily recently here from October 2nd, from down here, this whole move up, it's almost gone straight up. MFI has dropped down. So that's interesting. That's something to pay attention to. If you jump to the 4-hour locally here, you can see the price pushed up here until we got right here to the highs. And then they started selling off as price went higher. So selling into that movement up. Drop back here on the 1 hour. Look at this 1 hour. There's been selling going into this move up again from this area here. So from the 17.5 to 17.9, 18,000 area, from that move on up, selling has been continuing to go onto it. So With MFI looking in there, it's showing a lot of potential for some kind of pullback at least, if not a reversal as well in there. Let me see here. Yeah, Andrew says as high as it gets, laugh out loud. Pretty much. I'll tell you what, guys. If anybody's guaranteeing you anything about price action, I've tried warning you guys this for years. Those of you that are newer may not know, but anybody that's been with me for a while knows I always warn. Don't think hard about somebody who guarantees prices. If somebody's guaranteeing prices, either they're not really traders, they haven't been doing it very long, they don't know what they're doing, because as you spend time as a trader, you understand that you can't guarantee anything. Nothing's guaranteed. It's speculation. Okay? Or two, they understand that, but they're just trying to get people to listen to them and to get their count up so they can sell you something. All right? So always, always, always be wary of anybody that says, oh, hey, guess what? Whatever I was just saying. I completely just lost my train of thought. I'm sorry about that, guys. Guaranteeing prices. Yeah, hey, guess what? Price is only going to do this, or it's never going to do that. The biggest idiots in the world say stuff like that. And I don't mean that personally as derogatory toward anybody, but seriously. If that's what somebody's shilling you, they're idiots. And you've got to be careful of that. Because again, they may know that they can't guarantee anything, but they're banking on you thinking that they can. And if they're banking on you thinking that they can, then there's an ulterior motive. Don't get caught up there, guys. You have to understand, when you're online, you've got so much free information, which is great. But you have to be careful because, again, as a trader, is new to trading, you don't know what you don't know. And a lot of things that these bigger accounts, spew out there sound correct if you don't know what you're talking about. They're half-truths and sometimes outright lies. So you've got to be really careful out there. You've got to learn to critically think. Even if you don't know something, you have to learn how to examine what is being said. What is the context in which it is being placed? Does it really make sense? Or does it emotionally make sense? Because for most traders, when they hear these things, it emotionally makes sense. It tells them what they want to hear. And it doesn't mean that they're going to be wrong, even where it goes, but it means you can't guarantee that price is going to do anything, guys. Nobody's ever figured out how to do that. Some yahoo on Twitter, or crypto Twitter, it does not have the secret sauce that tells you where price is going to be all the time. If they did, they wouldn't be on crypto Twitter talking about it. If I did, I wouldn't be doing what I do. There's no way. I'm already, pretty all right. I would be so, I would own 3 of Richard Branson's islands, basically. I guess is what I'm trying to say. I wouldn't do anything else. But, that's unrealistic to think that you can actually know where price is going to go. You have best guesses based on the information that's available to you at the time. But information changes. As price action continues to play out, that information that's coming in is going to be different. It's going to potentially change. And you as a trader have to be willing to let go of any bias you may have to accept that. As long as it gets through those, but you've got to understand where your invalidation and validation levels are, and they have to make sense. They can't be like, oh, I'm just going to pick this because it's 10%. No. You've got to understand where these things may be. And if you are the type that has longer term projections, don't be afraid to trade opposite those predictions on shorter time frames. Because if you've got this longer term prediction that talks about price $5,000 above where you're at, and you're just sitting there not trading for that $5,000 because, that's what you're thinking, well, you're losing opportunities. Right? It may or may not happen. And, you get kind of stuck if you don't along the way, right? So just some things to think about there. Let me see here. Only a Sith deals in absolutes, LG says. Jordan Weaver pointing out that price doesn't move in a straight line, they said. That's right. Never moves in a straight line, guys. Let me see here. Hey there, Wayne. Good to see you checking in. Hank says the 1618 is 20,150 on stamp. Now that would be a great bull trap. It's true. Andrew's asking, are blow-off tops caused more so by leverage traders or exchanges? They're caused more by FOMO, is what it is. It's what it comes out to. Now, I think it's likely to be more of a, especially in crypto Twitter, more of a derivatives. I think it could be more of a derivatives thing because you can leverage much higher, than what you would obviously do just buying spot. But don't think for a second you can't get blow off tops with spot. They do it all the time. Because just a whole bunch of people jump in on an idea at some position. But yeah, being a derivatives exchange, it makes it a lot easier to get to a blow off top because you can really have that over leveraged push up and then the sudden dump of supply on you. That kind of just shoves it all right back down. Let me see here. Never say never, apparently. Let's see here. Do derivatives like Binance futures actually have an actual impact on price? Yeah, Ross Mark, they sure do. Derivatives, which includes futures, options, perpetual swaps, all these different things, spot, all these things play into price discovery. Remember, there is no price. What they say, price is what you pay, value is what you get, okay? And so if you think in terms of the market as being an auction, which is what it is, then price is constantly being evaluated by the market participants as whether it is fair or unfair at that time. And so price will tend to gravitate toward a level considered fair. But that changes constantly. So there is no, price, this is so high for price or whatever, this is so low for price. It depends on the market participants that matter. Your other time frame traders, your positional traders, your smart money. Because again, if you're retail, your liquidity. If you're the other, you're kind of driving price more or less one way or the other. But in doing so, it's always based on, what your understanding of the value of that price is at the time. Again, price is what you pay, value is what you get. All right. How come? Aren't they just contracts based on the underlying price? Because they all work together. Because your contracts are not going to go. Your contracts are all kept in line with what you're doing. If you think about perpetual swaps, for instance, they have funding rates, right? And those funding rates are used to increase or pull back on momentum to keep those perpetual prices there in line with what spot prices are. Keep them all together, right? But then you get into something like futures or options or whatever, and you're still, if it's futures, it may be settled in the actual product. If it's options, you have the option to actually, many times either settle in cash or settle in the product, in the asset. So yeah, it's not just contracts. You're still many times receiving the actual asset. So yeah. Let's see here. Yeah. So anyway, any kind of dealings that you're having with price action that are whether it's again futures or options or any kind of derivatives or God, there's so many ways to do it, even depending on on what market you're in. I mean, you can even get into credit spreads and debit spreads and things like that. When you get to the stock market. In bond prices and, treasury prices. I mean, all these things, all affects price. It all does. And all of that stuff affects Bitcoin price because Bitcoin in relation to the dollar matters. I know a lot of people are going, if the dollar goes up, it doesn't matter because Bitcoin is getting out of there. Bitcoin is taking you away from it. Yeah, it does matter. Because Bitcoin is denominated in dollars. And, contrary to what you guys may think, at the end of the day, most of the money that's in Bitcoin is in it for the profit. And if that's the case, than if what it is valued in dollars if the value of the dollar goes up to the point that it starts making more sense to be in the dollar than in Bitcoin, that money's going to move to the dollar. There's no two ways about it, guys. I know a lot of these guys come on here and they talk a big game, but until you see it actually happen, be careful. These guys, these big corporate guys, these ones that have done successful in business and whatever, remember, they've done that because they've learned how to profit. That's what they're interested in. Driving value, creating profits. Not in some, Bitcoin's going to take over the world type thing. No. No. that doesn't mean much to them. What matters is what is their profitability, and or are they protecting what they have as far as their wealth. It's all about that wealth that they have, guys. And if they're not protecting their wealth, then they're losing wealth. And if they're losing the wealth, then they're not doing their job correctly, and they know that. So they're going to do something different. Okay? Don't get caught up in all this rah, cheerleading Bitcoin thing going on. If it comes, push comes to shove, and all of a sudden, let's say the dollar just rocketed up and Bitcoin just dropped on down to 6,000, 5,000, 4,000, something like that. A lot of those big guys that are in are going to get out because they've lost, if that were to happen and they weren't out yet, they've lost a significant amount of wealth at that point. And again, as much as we like to believe that Bitcoin is going to continue on, I like to believe that. You guys know I'm bullish about Bitcoin overall. But the reality of it is, and you have to understand reality, the reality of it is, well, anything can happen. The government can decide that it's no longer in their best interest that they allow their citizens to deal in Bitcoin. And you go, oh, but they can't keep Bitcoin from they can't close down Bitcoin over. No, but they can sure as heck make your life miserable, put your butt in jail, in prison for it. They sure can. Oh, but they're not going to find me because Bitcoin's anonymous. No, it's not. Well, Monero's anonymous. Not really. Most of these anonymous coins, their privacy things are already being broken. The ability to trace them is already there. And it's only getting worse. It's only increasing more. Don't think for a second. Anything, guys, listen. When it comes to things that you do or that you have, if there is record of it somewhere, always assume that you are not anonymous. This is why governments are going to like the idea the central banks are going to like the idea. Okay, governments are going to like the idea of central bank cryptos because government can track everything you're doing. It's harder with cash. If I go up and walk up to somebody, give them $100 bill, if they don't say nothing and I don't say nothing, as far as government knows, I still have that $100 bill, right? But if you got to mark it down on a ledger, guess what? They know who has it. This is why banks are required here in the U.S. If you have a deposit or a withdrawal of $10,000 or more, they're required to notify the government. They are strongly encouraged to notify the government if it's $5,000. Don't think for a second they aren't doing it because their charters depend on it. You guys think that, government can't do this just because we're all these people and government's just this thing. Well, no, the government just hits you with your on-ramps and off-ramps. Banks, exchanges or whatever, banks, property records. Do you know enough? Do you know how to get things into a trust account that can't find you, that you can hide your name on, so that you can't be tracked? No, you don't. And the odds are if you do that, you're probably going to get caught anyway. And why the heck would you want to do that when the tax fraud implications from that are significant? Why would you want to go to federal prison for 20 years or something? I mean, Jesus. So stop thinking so small-minded, guys. Stop thinking about just you or about the group of you because the government's stronger than all of y'all when it comes to stuff like this. You have to absolutely understand that. Don't make the mistake of thinking that something can't happen with the government just because you think that it shouldn't. Life isn't that way, unfortunately. That's why I'm not such a big fan of government. But it is what it is. I pay what I have to pay. As long as I'm doing a part of it, I'll take advantage of tax breaks that I can, for sure. And I'll try to do things in a way that maximizes those, but I'm not one of those guys that gets really creative with my tax accounting. Not at all. I don't want to increase, all that nonsense from the government. I'm already irritated enough that they take as much as they do. So, yeah. Let me kind of catch up with you guys. Brian Riley saying this is exactly what happened in the late 70s with huge interest rates. People sold their businesses to cash out. Same could happen in Bitcoin. Sure it could. Let me see here. Yes. Does the MFI count for divergence? It does. Yes. Are pros long or short here? I don't know where they're at right now, honestly. I'm going to be interested, and we'll have to wait until next Friday to figure out where they are next Tuesday. But with where price is right now, next Tuesday should get interesting. But we won't be able to find out until next Friday. Now, another thing you guys need to be aware of is we've got Thanksgiving holiday here in the U.S., usually from Wednesday through Sunday, next week. Most people will check out mentally on Tuesday. I don't know why they even go to work Monday. But, that could play havoc on the market as well. Potentially a lot less liquidity and whatnot as people travel. Even here in the U.S., where government's saying, oh, you should only have a couple of people at your house for Thanksgiving. A lot of people find it very offensive. Again, it's the idea that, so this is our family get-together, and I've got, potentially I won't be able to see this person until next year this time. And they're older. What if they pass away before then? So there's a lot of probably a lot of pushing back against that. So I assume there's going to be some pretty decent traveling and family get-togethers here, still in the U.S. anyway for Thanksgiving. So that could affect the market with what's going on there as well. But definitely interested to seeing next Friday where they stand as far as long or short. Oh, let me catch about you. Let me see here. Ross Mark says government rant equals a TWC show staple. It is the one thing you guys can definitely take from me all the time. Again, I'm not a fan of the way things are done. Government, again, I don't think that you're necessarily a great person if you want to use the government to push your personal biases and whatnot. I think we could all live just fine without that. It would be difficult right now. A transition to no government right now would be really difficult because people are so used to government. It would be really difficult. And I'm not saying that not having a government, all of a sudden all the problems will be solved. No, the thing is, even with government, you still have mafia, you still have gangs, you still have yakuza, you still have, just your local, robberies and violence and everything. I mean, so they're still there with government. Would there be more of it without it? I don't know, but neither does anybody else. Would it make me feel better to be able to, to protect my family as I see fit? Yeah. Because at the end of the day, listen, and I'll get off this rant here in a minute. At the end of the day, nobody cares about you and your family like you. Period. I don't care what you believe about government. You can just shut your mouth right now. Nobody cares more about your family and you than you do. Nobody is going to step up to defend your family like you will. Heaven forbid somebody ever did or tried to do anything to my son. I can't even explain the world of what would be coming at them. And I know many of y'all are parents and you feel the same way. So if you come off of that position, it's scary when you think about government. Because government limits what you can do to protect yourself and your family. And I'm not a fan of that. I'm not a fan of that. I'm all about personal security. Most people aren't. I've told you guys time and time again, there was for a while there, the biggest thing going around Bitcoin was be your own bank. I'm down with that. I'm good with that. Most people aren't. Most people don't want to learn how to do that. They don't want to have to be responsible, because to take responsibility means that if you screw up, it's your fault. And you have to accept it. And most people don't want to do that. The same thing for personal security. Most people don't want personal security. So they take the guise of personal security. The government says, oh yeah, security and whatever. But guys, again, I've told you here, you think, oh, I've got 911, so I can just call 911 and the cops will be there. They may, but the Supreme Court decided decades ago that they don't have to. It's a pretty gruesome case. Every law school student learns it. But so don't think for a second that they have to show up. And don't think for a second you can hold them liable if they show up at the wrong place. Nope. You don't have to. They're not there to protect you. That's the end all be all of it. All right? So, okay, I'm done with that. I'm sorry. I know some of y'all are very pro-government, and it really yanks your chain when I start talking like this, but it is what it is. Again, I would much rather be responsible fully for what's happened, what goes on with me and my family than pretend like anybody else has any of our interest at heart better than what I do. So yeah, robber barons everywhere. Yeah, right. Do I believe in a reset? What do you mean? We're like, what kind of reset exactly you're talking about? You talking about government kind of is destroyed and new government comes up? I mean, yeah, that's the history of governments. They work until they don't anymore, and then they get down, and then a new one replaces them, and the new one's pretty much what the old one was. That's the way it always is. People, cycle. That's just human nature. Yeah. Crypto Girl says, let me see here. With alts getting into the lower end, what's your gut feeling as to when and if alts will have a nice run up? End of year, early 2021 or later? Oh, I really don't know. I haven't really thought about that particularly. I honestly haven't really thought a whole lot about alts. We do our alt setups, of course, and we've had a lot of really good ones with those. But again, if I look at them, because I look at them 3 times a week there at least, in depth when I'm doing the hot takes. And like I said, a lot of the older ones seem to be hitting all new all-time lows now and whatnot. And some of the newer ones are maybe showing a little bit of life. So I think we're probably closer than not. But I couldn't guarantee it right now. I think, I think it's going to depend on what happens with Bitcoin here. Do we top out around the all-time high there and like a big pullback, or do we just get a big reversal off that, or do we just get like a bit of a pullback, a few $1,000 pullback, and then it continues higher? Because if that happens, then Bitcoin could stretch, into the end of the year potentially before it has any real big pullback. But if it gets there pretty quick here, it could be as early as next month, that we're seeing alts really kind of taking off. So it really depends on what goes on with Bitcoin right now. And I think I'd really do a disservice to anybody if I said it was, most likely going to be this or that. It just depends on what happens right now, I think. Crypto Girl says, this Thanksgiving, more people will be at home. Crypto Girl, you ain't living in Texas, baby. There is a lot of people really upset about this idea that the government's telling them how many people they can have in their house. And whether anybody agrees in that or not, it's definitely something to pay attention to. What do I think about stocks right now? Somebody was just asking. Let's see here. Let's pull up the S&P here, E-minis. So I've got them potentially topped out, but we need to see a decline down here right now below, right there around 35.25 or so. I don't know, what is that exactly? Let's see here. 35.0650. Okay, I did have the fibs right. So yeah, we really need to see a drop down below that now to really kind of start feeling more confident about this top being in. Beyond that, We need to get down here below this swing low over here at around 32.25. My ideas about stocks really haven't changed any so far. Still thinking that tops are right around here. Right now, this is pretty clearly an ABC up here. So getting back down below where that starts kind of solidifies that as corrective move, which means this is likely a 1 and a 2. We've got a pretty clean 5 count up here. Let's see here. There's the daily. You see this large bit of bearish divergence off of the swing high up here in the September. Right there. Topped out, pulling back here. Even OBV showing negative divergence potentially there. 3-day again showing the same things here with RSI. Stoke RSI is getting up there, but not quite into overbought yet, but it is curling back over. Weekly, again, bearish divergence. Then we had this other bearish divergence over there. And you're jumping into the monthly again. It's been going down there since January 2018, since I first started talking about that that distribution type area potentially being, or starting in anyway. Let me see here. We're at a 6 on the monthly for TD sequential. On the weekly, we're just on a 3 here, but man, that weekly isn't looking too healthy up there. Let me see, 3-day, we're on a 5. Daily, we just had a 9 over here, rolling back over. We're on a 2 the other way. But jumping back over here to this weekly here. We had this good candle, this good bullish candle here. And it really didn't do much anything. It just kind of popped up above this and then closed back below it. So the swing high here is 35.87. This one closed at 35.82. And then this one opened here at 35.87. So, especially this one continues coming down. I mean, potentially you've got a bit of a bearish SFP up here from back there on August. Especially if this weekly closes down below that, because it opened up where this top point is here. So potentially a bearish SFP right here. We just need to see this come on down here and kind of confirm it. So you really want to see it getting below this open, 35.2250. You want to see it really kind of getting below there. Now, it's not going to be this week, but maybe next week or something like that. If we can get a rollover and do that, that'll add a lot more strength toward at least getting down here toward this 3270 area, 3300, toward the bottom end of the range. You lose the bottom end of that range, then you start looking down here. You lose that, you should start looking down here. Yeah. So right now, locally, we haven't done anything significant yet to suggest that the top's in. But again, this is pretty clearly an ABC right here. And we've dropped down below that swing high. So you've got three legs up. You've dropped down below. Usually you should default to the idea that this is corrective until proven otherwise. So I would look for a move down below there. So we'd be looking for a bigger kind of correction at least coming in. Let's see here. Hey there, Martin. Always good to see you. Says fiat money is only copier paper. Now, don't forget, guys, I used to be somebody that said this as well, but, there's the big thing that goes around in the circles, the anti-government circles, which is that there's no value, it doesn't have any value. It's created out of thin air, like the dollar, for instance, right? But that's incorrect. There is value in the dollar. And that's something I've been speaking about, especially more lately, which is that if you want to pay your federal taxes, which I hope you would want to because, okay, maybe you don't want to, but hopefully you will so you don't go to a prison. But your federal taxes must be paid in U.S. dollars. Period. If you are a foreign company that owes taxes to the U.S., guess what? You have to pay in U.S. dollars. So there is a value to U.S. dollars. It is required. It is required to pay your taxes. So, again, the argument's often, there's no, it's just created out of thin air and whatnot. But which is correct. It is, and it's not, doesn't mean it's good, but there is a value to the dollar, and that's in that it's required for you to actually pay, for your taxes. It's also the preferred currency throughout the world. Believe it or not, it is. I know some of y'all maybe, in whatever countries over Europe and say, oh, yeah, no, it's not preferred. Well, I understand that you hate us. It's all right. I'm not exactly a fan of us many times as well. But that doesn't change the reality of what it is, guys. Nobody else is using anything more than, there's nothing being used more than the dollar for debt payment in the world. If you want to buy oil, for the most part, you're paying with the dollar. Almost all the oil sold in the world is sold, for dollars. There is a value in it. Again, that's not me saying that the dollar's, that it's a great thing or anything, but I'm being realistic about it. And so, I say that because then we get to this point where, one of the things that gets parroted even by the larger people on crypto Twitter, the more successful people, just generally in life, is that, the collapse of the dollar is inevitable. I don't think it's inevitable. And if it is, I don't think it's going to come anytime soon, honestly, guys. I really don't. Oh, but all this inflation or whatever. Yeah, well, guess what? As long as the dollar's doing better than the rest of the currencies, still is. Well, that's the problem. That's why there's Bitcoin, so that it's to get out of the whole fiat game. Well, good luck with that. I would hope we could get to that, but I'm not silly enough to believe that that's going to happen. And then when I say silly enough, I don't mean that to be disparaging to anybody, but if you look historically, again, if you look at philosophically the nature of power, and historically in governments and political theory and things like this, it's very hard to make a cogent argument about the dollar, becoming nothing. It really is. And I know some of the arguments go on, but the China's growing and this and that. You guys know about the defaults about to happen over there in China? Yeah, you might want to check on that. Things aren't quite as rosy as people have been led to believe recently. But even if it did, it takes a while for China to come up and really take anybody that's going to take any national currency that's going to take over the place of the dollar. It's going to take a long time to get there right now. It's nothing that's going to happen in the next 10 years or 20 years. It's going to take a significant period of time because the dollar is so entrenched into everything that happens globally right now. We're not talking about your personal opinions or your emotions, guys. I'm talking about reality. And so if you're buying Bitcoin because of the thought that, the dollar is going to collapse or whatever sometime soon, I don't see that you're correct in that. I don't see how you're correct. I don't see much of a realistic situation in which you are correct, within the next 20 or 30 years. Honestly. That doesn't mean I'm right, but I really find that, other than just everybody's emotional bias, they want it to happen. But here's the thing. If that does happen, and you have to use, let's say it was all crazy and that happened and you had to use Bitcoin as currency. All of a sudden, for most people, Bitcoin isn't so great anymore. Because they're excited about... Look, all you have to do is... If you don't believe me that most people are in Bitcoin for the profit, all you have to do is look at all the cheerleading going on because we're near the all-time high. That's all you have to look at. If it really was about protection of what is and everything, people wouldn't be so off-key about this whole all-time high and everything. But they're interested because it means money. It means if you're holding one today, it's going to increase in value, right? You don't have to do anything else with it. You don't have to trade it. You don't have to do anything. You just have to hold it. It's going to go up in value. Be honest with yourselves. That's why you guys are doing this, right? So stop listening to the other arguments everybody else is making. Because when you think about it, they really don't hold a whole lot of water. Now, that doesn't mean that can't eventually happen or that Bitcoin's a waste. It's been a great moneymaker. I say definitely, get in there and trade it or invest in it or whatever while you can. There's no guarantee about tomorrow. But if you can make money up to that point, guess what? You're doing great, right? But always understand, there are no guarantees to how long Bitcoin's going to be around. There's a lot of hope that it'll be up there, and I hope it'll be up there long enough. I hope it'll be up there long enough to hit $1 million because, like I said, I'll be buying 3 Richard Branson islands there. But, you know, truthfully, there's little to no guarantee. And historically, the odds are against Bitcoin. Doesn't mean it can't do it. But it does mean you have to realize if you're going to be in this, what's actually the reality of the situation. So that way you don't get it all emotionally tied up in what everybody, all the chanting that goes on, you know, in social media. You got to protect yourselves against that, guys. You're the only one that's going to protect yourself. Let me see here. We got to catch up with you guys again. You guys are talkative today. I love this. Tell Your Rider says 911 and the U.S. police don't really have any legal obligation to protect you. So few knew that, and they definitely can't get there in time, 100%. Yeah, exactly. Even if they could, yeah. Even if they are making their way to you guys, the problem is, can they make it there fast enough? So if your government says, listen, you can't own guns to protect yourself, and somebody breaks into your house with a gun, or heck, with a big-ass sword or something, right? You have to hope that the police are going to get there before you're mauled or dead, or your family is, right? I mean, so it's not even about, okay, well, maybe the police aren't going to show up. It's even if they're going to try to, even if they do their best, odds are that they're not going to get there in time. Most of the work, you guys may not understand this, but most of the real police work is done after a crime is committed. Trying to find the perpetrators and whatnot. And I'm going to be honest with you. Police departments don't have a very successful history with crime in general. You know, finding the evildoers and prosecuting them and everything. There's a lot, especially in the U.S., that we are, you know, that as we grow, we are taught to believe that aren't true about government and police and all that. And I don't have anything against, you know, anybody personally. I'm just saying that in general, these are the realities. If you go to law school, guess what, guys? These are the things they teach you. Now, I was fortunate enough to know all this before, but for some of my younger classmates, you know, it was a real eye-opener. You know, and for most of y'all, I think it would be a real eye-opener if you don't know as well. Let me see here. Okay, Ross Mark saying reset as in the dollar not being feasible any longer plus some kind of debt jubilee. Oh, well, there you go. Yeah, so there we go. You know, I think that the most likely situation, you know, again, I've been talking about credit bubble for a while. You know, potentially right here where we're at the top of it. Now, that doesn't mean we're there. Potentially it expands for the next decade. Who knows, right? But there's a lot of things going on that suggest this may be the popping of that credit bubble. And if that happens, what happens to the dollar? Does the dollar just go into nothingness? No, I don't think so. I think if things get really bad, again, central bank currency created. But too much of the world relies on the dollar, you know, to have it just disappear, right? Right now, anyway. So I don't think that would happen. Honestly, I don't think we do. Again, as I was mentioning earlier, I don't think we're going to have I don't think the dollar is going to go out of, you know, disappear anytime soon. I'm not saying it can't happen at some point. I'm just saying I don't see it happening anytime soon. There's a lot that would have to go on over time to have something like that happen. Let's see here. Data says there's always someone lazy enough to allow someone else to do or decide it for them. Ultimately, that leads to a system involving governments, I suppose. Yeah, exactly. Let me grab a couple more charts here for you guys. Let's see here. What's going on with oil? And I'll get back here and answer some more of your questions. Appreciate the interplay and the back and forth, guys. Man, oil just being a pain in my rear end. I'll be honest with you. Right now, I've got it still as a 5 up here, and then an A and a B and a C down here. So this would be a 1 and then a 2 It's been a pretty deep 2, so I'm cautious. Doesn't mean it can't turn down, but I am cautious. Right now, you'll notice you have this area of activity right here. And you'll notice that coming down, you kind of hit that area and bounced out of it. So you've got to kind of make it through this general area here, through this, $40 level impulsively to get on through this. And then this becomes resistance, right? Right now it's still kind of working as support. But so far, again, potentially, it looks like we've got a 1, 2, 3, 4, 5, and then an A, B, C. So again, another deep retracement, but not quite through it. And you can see here that you had supply coming in up here at the top. Your supply was these 2 candles. These 2 right here at the top. That's your supply coming in, right? You have this bigger candle coming after. Look at how low volume is. Moves down easily. We're getting up here, and again, look at the volume kicking in right here. So you've got selling going on in this area. So, we kind of dropped through the channel support here, pushed back up, finding resistance, looking for it to kind of roll over. We need to at least get down below 41.26 to begin with. And then your next target's 40.57, and then the swing low here at 40.06. So if you can kind of get through that, that should set up a move on down here. And in that case, you just need to get on down below 37.06 down here. You need to get below that. Now, based on the height of this channel, your target here, pattern target, is below that at 36.69. So that's what I'm kind of looking at. But if not, if this is A, B, C, and done, so like this is 1 and this is just a 2, and then we're working on 3 now. Well, we've got a 1, 2, 3, 4. We've got a 1, 2 here, and then 1, 2, 3, 4, 5. Kind of working its way up there. So if you do this, you go here and go, okay, well, if this is 1 and that's 2, then you have that 3 up here around just below the swing, or just below the EQ of the supply structure, 46.33. So that's minimally where I'm looking for it to go if we're breaking above this 43.06 kind of swing high up there. And then really you have to get above. I mean, if we're getting above that, I think that's probably where we're going. But you ultimately have to get above this swing high over here at 43.78. And I think that becomes your minimum wave 3 target at that time. Why don't I say 1, 2, 3, 4? Because you're only right here. It's just barely bigger than wave 1. So, this would at least be a 1, 2, and probably a 1, 2, if that's the case. Which means your wave 3 would be even higher. But for right now, we're looking for, an advance above this swing high over here to kind of set up at least this target up here. And at that case, probably higher up after that. Let's see here. Gold. If we take a look at gold here real quick. Let's see. All right. So again, this decline here off gold. Hey, it's not even coming in straight. What's going on? There we go. This decline here from gold took it to a new low. It went, took out these swing lows here. And so I've got this as a 1 and a 2, and this as a 1, 2 right now, working its way down. So we need to get a decline below this, below this purple line, which is the swing low here, at around 1848. If we're dropping below that, my wave 3 target is a minimum here of 17.08 and 30 cents. So 1, 2, and then 1, 2, 3 here. So 3 of 3 basically. Is it 3 of 3? Wait, let me make sure here real quick. Not 3 of 3. It might just be 3. Oh yeah, no, it's 3 of 3. Okay. So again, this would be 1. This would be 2. That gets you your 3 right there, which would give you a minimum 5 down here around 1663. So 1663 then takes you below this wave X triangle here, X termination point, which again should suggest that this is done then, and you've got a larger correction still coming in. So that's what I'm looking there. The only way this changes, guys, is if price advances above this swing high up here. Right up there at 1966 and 10 cents. If it gets above that, then it changes. As long as it's below that, that's what you should likely be looking at. And so, you know, probably the first, you know, good count, you know, basically what I'm trying to say is if it drops below this swing low, that kind of puts that count into progress and gets it going. Silver, not too different. Silver. Oh, there we go. So silver, though, I got a little bit different count, and I may need to change it at some point. But right now, my count has us as a 1-2, and then a 1, 2, 3, 4, which actually pushes into 1. So is it? I don't know. It could be a 1, 2, 1, 2. But right now, I've got it as a 1, 2, 3, 4 here. Locally, we had price drop down out of this ascending channel, bounce right above the S1, hit the channel as resistance, and pull back. So I want to see a move down below this swing low right here at 23 and 67 cents. And then, of course, follow through below, a little bit lower there at $23.60. If we can get down through that, I think we're starting to look pretty good. Really, we want to get down below wave B here, which is $23.26. That should really kind of set it into motion. I've got a wave 3 right down here at around $21.01.5 right now. So kind of looking for it to head on down to where they have 5 maybe down here toward $20.04 maybe on that. But you know, if we can get that move down, then that should definitely, you know, increase confidence getting through this purple line, you know, in the count. Let me see here. Let's see here. Sorry, guys, didn't mean to get you going with politics in here. Let me see. Let me catch up with you guys here. Guys, I really didn't mean to get y'all into that. Possible broadening top on the SPX on the monthly. Possible. Definitely a way to look at that. Yeah, you know, we zoomed out there to the weekly and the monthly. You got the higher highs there, and you get the lower lows. Yeah, possibly. That's that megaphone pattern, that inverted symmetrical triangle. Yeah, definitely something to watch there as well. I mean, my count doesn't, you know, end like that. But, yeah, that is a possible, you know, pattern that you could be watching. And if that pattern is correct, then we should be at the top. That should have done it with the last move up. So, yeah. Hey, Last Samurai checking in from the UK, man. I love it. I got so many followers from the UK. Lots of members from the UK as well with us at TWC. I love it. Let me see here. Yeah, Common Man says a Bitcoin market cap chart. Monthly average already broke above the all-time high. We are waiting to see what happens with the November price candle, but maybe it's more bullish than we realize. I don't really pay a whole bunch of time to the Bitcoin market cap thing. I mean, you know, it is what it is. I don't think it really tells us a whole lot, honestly. You know, like, oh my gosh, we were at the all-time high and now we're higher than it. I don't think it really tells us all that much right now, locally. I think, you know, if you're looking at those larger pictures and whatever, you know, as long as it's around that, just breaking above or whatever, I don't think it really says a whole lot. I think if you get continued movement higher, you know, pullbacks and whatever, you know, again, like we look at anything else, trends, right? I think that's where it maybe is a little bit more valuable. But I don't think just because it's popped up above the all-time high right now, I don't necessarily believe that that's indicative of what maybe the market, again, as I talked about at the beginning of the show, you know, miners over in China are having a hard time trying to offload their coins because of what's going on over there right now. And so if they get to a situation where they can actually offload them, you can expect a lot of supply to come in. And is that supply going to be enough to really take down price? Because guess what? If price drops $3,000 or $4,000, all of a sudden we're well below that all-time high again for market cap. See, so if the advance in price right now is really much more a product of the lack of selling due to something like that going on, then the market cap could be a fake signal, basically. Yeah. Did we have our own dollar or currency at one point? What? Who, me? What are you talking about, Texas or me? We didn't. Let me see here. Thank you so much, Crypto Girl. I appreciate you. Common Man says, dollar isn't going anywhere anytime soon. I'm worried about the buying power. DXY better hold above 90. Oh, yeah. So, dollar. Let me pull that up here real quick. We had it up there, and then I went to the other ones here real quick. Yeah, so dollar again, we've got the two main scenarios we're watching, which is a triangle or a descending wedge. I'm leaning toward the descending wedge. If we have this descending wedge, or it would be an ending diagonal. Technically, price could come down as low as $91.04. It could not go below that, because going below that line would make wave 3 the shortest, and we can't have that. Realistically, I would think it would only dip just a bit below this previous swing low here. We have a lot of sideways going on, not even since the swing low down here on the 1st of September, but really since over here in July. Because they'll have all this sideways here, and then boom down, and then up, and all this sideways. This is rotational. Remember, at this point, we were talking over here, I was telling you that the bears were at pretty much the most bearish level they've ever been against the dollar, right? And I told you that historically, when that happens, dollar reverses. It's always been that way, which makes sense. It's the way you get with anything. When you get to that much of an extreme, things reverse, right? In any kind of market. But all this, there's no definitive, it's not like this here coming down, right? It's a lot of up and down sideways. So it looks to me like there's a lot of rotation going in here from bearish to bullish. And that's why the DXY is having problems, kind of really just sinking on down. So again, leads to this ending diagonal case here, which would get us probably, 91.5, maybe not quite that low, more likely than not, I'm thinking, if this 1, 2, 3, 4, 5 is correct. Now, the thing about that, let me kind of pull this over here. The thing about that is that if we get this, the one thing, whether you believe in this or not, if this happens, you need to be aware that price will probably do, as it gets down here, whatever, boom, it'll do something like that. It'll take off strong from the end of it. It'll reverse hard and fast. And if it does this, nothing's safe. Bitcoin otherwise. Everything is going to drop. Think of back in March when the dollar popped up and, as stocks dropped and Bitcoin dropped and everybody dropped, right? And dollar popped. Same idea here. Now, I'm not saying we're going to get that same extreme of drop. I'm just saying, I'm not saying we're not. But what I'm saying is you should expect a strong rally when that descending wedge ends. That's the way wedges work. If it's a proper wedge, you're going to get an excessive rally starting from that. It's going to be strong. It should be hard coming out of it. And everything, again, is valued against dollars there. And so you should see gold, silver, stock market, Bitcoin. It should all drop if this happens. So, yeah. Let's see here. Hank says the DXY in 2008 was at 70. Yeah. And it didn't disappear, so it can still go much lower without collapsing. Yeah, again, another way of looking at it. Exactly. Guys, again, and if you're not used to really thinking critically, and I do not mean that as a dig, okay? I'm not trying to dig at you. But generally, we are not really taught how to think, okay? And so if you're not used to doing that, then it's easy to get caught up on crypto Twitter with the really emotional side of everything. Michael Saylor, Tudor Jones, and these things they're saying. But again, most of y'all have never had, interactions with people of that type, of that stature, of that wealth and magnitude, right? And so you don't really understand how they are, and that's why I've done a lot of talking lately about, about how where they're at. It's it's about wealth and keeping it and growing it. It's about profit. It's not about these ideas that Bitcoin's going to change the world and take it over. They hope it does to the extent that it increases the value of what they're holding. It increases their wealth. But if you look at people, if you look at wealth through history, that's what it's always been about. All right? And wealth always increases most at the worst points in history. So at the points that your country is doing the worst is usually when the greatest transfer of wealth happens. And usually it's a consolidation of wealth into the wealthy, which again means it's asset driven. So I point these things out to you guys. It's hopefully it's a bit of a combat against all that other stuff that you get from social media and crypto Twitter, because again, guys, really, everything is against you online. Your social media, the AI, the algos that they use to decide what comments to show you or what stories to show you, are all based on creating a sounding board, an echo chamber for you. Because if they're saying things that you agree with, you're more likely to spend more time reading it and agreeing to it and speaking and interacting. And so, when you're on Twitter and Facebook and Instagram and all these things, the content is curated toward keeping you active on it, which means it's there to kind of give you a lot of agreement, which isn't necessarily maybe what's really going on. So just make sure you guys understand that. Rossmark, you're welcome. Let's see here. Common Man says, of course Bitcoin folks are in it for profit. Bitcoin is still over 90% speculation. So yeah, I think it's even higher than that. I don't think there's very many people who are in it for the tech, honestly. And if they're in it for the tech, they're not in it very heavily. If you're getting involved in Bitcoin heavily, it's because you see an opportunity for you to increase your wealth. That's the end all be all of it, guys. That's the way speculative markets are. And that's exactly what it is. It is a speculative market. We get some yahoo coming on from Bloomberg or something, or BlackRock, or I don't remember who it was, talking about how, oh yeah, Bitcoin's a store of value. It's not a store of value, guys. Just because it's gone up in value recently does not mean it's a store of value. It means it's a speculative asset that has risen. That's what it means. Don't trick yourself into thinking it's a store of value. Now, that doesn't mean it can't become one. It can. Sure. It's not one right now, though. It's too volatile to be a store of value. A store of value shouldn't be dropping, 80% in a month or something, Yeah, things like that. I know I'm kind of over-exaggerating a bit, but you guys get the idea. Store of value should be a bit more stable. The large swings shouldn't happen, quickly, if it truly is a store of value. Let me see here. Oh, guys, let me kind of catch, man. You guys are really chatty here. I love it. Martin, man, I wish I had been able to see you saying goodbye there. I hope you have a great weekend, man. LG, you're very welcome, man. Sure, for the stream today, definitely. Let me see here. Dub C Productions, what's going on? I see you checking in there. Crypto Mowgli took off too, man. I didn't get to catch up with you guys, sitting here trying to talk with you here. You guys are pretty awesome. Let me kind of catch up. Oh my gosh, where are we at here? Let's see here. Check out the Aussie dollar against the yen monthly. It's making a huge ABC with an inverted head and shoulders. That's possibly part of a bigger, deep 1-2 wave at Gans 88.6, typical of a deep 1-2 waves. What'd you say? The Aussie dollar against the yen? Let's see here. See what you're talking about. I got to get going here in a minute, guys. It's been about 2 hours, but I've really had a good time here, guys. Thank you so much for joining in and asking questions and giving your comments and whatnot. Let me see here. ABC on the monthly. You'll have to tell me about where you're looking about on that monthly there. Let me see here. Where are you talking about ABC? You did say monthly, right? Let me kind of catch up with where you were there. Have a great weekend, Crypto Girl. Let's see here. If you have time, it's making a huge ABC with an inverted head and shoulders. Inverted head and shoulders. Okay, maybe right here, right? You're looking at right here? Inverted head and shoulders? Possibly, yeah. Let me see here. Yeah, you know, if this is an inverted head and shoulders, you know, there's your neckline. Looking for a break above that. If you get a break above that, I mean, from a monthly perspective here, that's a heck of a long trade. 1,773, almost 1,774 pips above that point of breakout. Monthly's engulfing at the moment. There's not a real trend here, so I wouldn't say it's, you know, bullish engulfing, but it is engulfing. Price trying to get back above the pivot on the monthly. Stochc RSI is still pretty high, though. RSI's got room to go. Let me see here. Oh, maybe you mean A. No, that wouldn't be ABC. I thought maybe you're looking like an ABC here. Taking it from the top, a huge ABC from this here. That is what you're saying. Okay. So I guess you're saying A, B, C here. 1, 2, 3, 4, 5. Yeah, it makes a C. You've got basically an ABC there. That makes sense. Yeah, you would get a flat correction is what you're looking at, I think. And I think that may be what you're thinking about here. Yeah, you're above the 90. So again, you get this, let me see, is that the swing high? It looks like that's a swing high, so we'll go with that. You got your ABC right here. Let's kind of change these out a bit here. And then, of course, you've got your 1, 2, 3, 4, 5. And you come back and then 3, 4, 5. So that gives you A, B, C there. And this just makes this a larger A, B, C down here. And of course, that last C wave there, you've got 5 down. 2, 3, 4, 5. So yeah, that's a nice catch on the monthly there. I think you're probably looking at that correctly there. And, you know, if you've got a little patience, you know, you can probably wait, you know, if you're waiting for this pattern breakout, you would wait for that that neckline breakout there. So probably up here around 79.5 or so. If you're a little more risk tolerant, you might be willing to jump in there right now, or at least at the end of the month, depending where it closes there. But, you know, this is the monthly. You could have a bit of a pullback before it heads up, obviously. Let me see here. As far as what is this, the daily here? Excuse me. Let's see here. I've got a 1, 2, 3, 4, 5, ABC maybe. Yeah, I mean, it looks like we've got further down to finish this out before it continues higher. If I'm looking at the daily here. Flip this back around. Yeah, it looks like it might try to get down here toward this 38.2. Let me see if we do the 1-to-1. So wave C, if this is A and this is B, then wave C would equal wave A right here around 71.71, right above that 38.2. The 38.2 hits the just about the EQ of this supply structure, or this demand structure right here. So, I mean, I would definitely, you know, right now kind of be looking at that as likely target at this point. if this is an ABC done here. So yeah. Let's see here. Yeah, so I mean, depending on when you guys enter and whatever, as long as you can withstand a bit of a pullback first. It's a pretty shallow pullback overall. But that weekly, we're already reset down here and oversold. That can pull back that down here nicely to get there. Get you right above the weekly S1 pivot. Again, if I'm looking at the weekly here, I'm kind of looking at this area down here. Right there. I don't know where that gets us on the daily. That gets us to the 50%. So, I mean, I think you get a minimum here. Again, Wave C doesn't have to stop at 100%. That's just usually where we look for our initial target. But if this is 1, 2, 3, 4, 5 as an A, and then A, B, C for a B, this would be minimum. But I generally would look lower down, 50%, 61, 8, 65, 70 and a half coming out of that. I don't think it's just going to bounce to the 38.2. Again, when you jump out there to that weekly, that structure right there interests me. That and I don't know. This area looks. I don't know. That one looks kind of interesting right there as well. And that gets you just above the 61.8. So yeah, I could definitely see it hitting that 61.8 as well. I think it's probably headed down overall for a little bit first. But you did have this bullish divergence here, which led to the bank up here. If it continues up through this swing high, then maybe we're looking at an ABC here already done. And we'll look up there. If you get back above here. Definitely if you're getting above the swing high there, I'd be thinking probably headed higher. But I would for sure watch that inverted head and shoulders pattern right here. Because once it breaks through that, you should be good to go. Higher up there for almost 2,000 pips. Be a great long trade right there. Yeah. Hey, have a great weekend, Casper. Yeah. I think, Samurai, I think you're probably getting along the lines of the right area there with that. Yeah, like I said, I think 32 is a minimum, but I really would lean for it to head at least down toward that 50. I mean, that was my first thought when I looked at the weekly. Was that bit of demand right there. And that almost perfectly marked the 50% mark as we saw there on the daily when we zoom back into it. So, I'd watch that. This definitely isn't, for a weekly isn't overly positive. Get this huge wick, and then today get another wick and a doji. But for right now, price is above the pivot. If you get a close below that pivot, then I think you can feel a lot more confident about shorting it on down at least to, again, 38.2 and then go from there. So there you go, guys. So there we go. That's what we're kind of looking at as everything goes on there. I really appreciate you guys checking in as always. We'd absolutely love to have you. So come join us at howtotradetowin.com. I'm not that special, but the people we have there are absolutely amazing. So our members really are absolutely great, guys. Lots of fantastic information, lots of stuff going in on a daily basis. Like I said, as far as as who we have and what we've got going on, let me see if I can do this here. Let me see. Kind of get up in here. Let me see if we just get all those channels in there. If you're just kind of wondering, maybe you think, oh, they're just saying they don't really have all that much content. I promise you guys, the content is superb. There's a ton of it. But again, these are all our channels here. If you're tier 3, basically you get all these channels. If you're tier 2, you don't get as many. If you're tier 1, obviously you get a lot less. But we have discussion channels, we have the updates here for the daily and intraday updates that we do. If you're tier 3, hot takes, these are where our setups go over here. These are our discussions over here. Going on through that. Bitcoin channel, this is obviously our most poppin' channel. Everybody loves this channel. Lots of stuff going on here. Lots of great information. I tell you what, if you're just trying to learn things about the market, I think this is an absolutely amazing place to be because everybody's always bringing in new ideas and concepts and explaining why they're looking at targets and how to get there. And you really get exposure to a lot of different styles of trading. And, again, at first, it may be a bit overwhelming, but that's the way it is with anything new you learn when you're immersed in it, right? So as long as you hang out and keep, dealing with it at first, it becomes much easier. And all of a sudden, you start picking up really quick. Of course, we've got discussion channels for our daily, and our intraday updates there. Our weekly educational series here. This is where you have all the... at the top of every channel, you have this... let me see if I can show you here. This right here, this members list. This pinned messages thing. And so if you go to the top of this weekly educational channel and you hit the pin, it gives you direct links to all the weekly live training stuff we've done, as well as a description of what we taught in each one of those. So it's a real quick and easy way. Whenever you come in, if you come in as a tier 3, you get access to all those previous ones as well. We also have our educational video series. This is available to tier 1 and tier 2. And then, of course, we've got lots of stuff in there. I'm working on expanding it even more, re-recording some of the videos because we've been doing this for a couple years now. Like I said, the basics of Wyckoff, basics of Elliott Wave, basics of price action patterns, candlestick patterns. I'm going to add a lot more to that before the end of this year. But tiers 2 and tier 3 have extra. But it begins here, up here. You say, okay, well, I'm brand new. Is it for me? Well, it starts with an introduction to market psychology. Goes on to what differentiates the cryptocurrency market from the other markets, emotional trading and news events, trading styles, risk management, different types of charts, time frames, trends, channels, fib levels, divergences, momentum oscillators, moving averages, volume, Bollinger Bands, pitchforks. Everything else going through there. So a lot of information there. But here's a good thing. This is something that Adam did recently. He created this new traders only channel. So basically, if you are a current member or if you come in, as a new member and you believe that you're a beginner, if you're new, Adam will talk to you directly. But if you're already in, send a DM to Adam and say, hey, listen, you think you belong in that channel? And he'll look at your experience and kind of decide if you need to be in there. But the new traders only channel is great because a lot of times as new people coming in, you're really scared, nervous about kind of saying something out loud, thinking everybody's going to make fun of you or something. And since Adam handpicks everybody in here, that anybody in there is new just like you. So you don't have that same fear you might have in our other channels. I hope people in general don't have that fear, but I do understand human nature. And I think this is a great way to really kind of help you be able to ask the questions that you need to ask. Because here's the thing, guys. I can sit here and talk all day long about all this stuff. But if it's not for whatever reason clear to you at some point and you're not asking questions, then you're not learning. And so the goal is to, however long you're going to be with us, guys, is to make sure that you're learning as much as possible. And of course, we got all our altcoin discussions, VIP altar opportunities for our tier 3. Chart requests and chart critiques are for tier 3. We've got an FA channel here, general discussion, investments other than, trading and stuff, questions. We've got a macroeconomics and finance channel here. I've got a whole bunch of information I'm going to load you guys up with on that again here, probably during the Thanksgiving break there next week. But this is where I love. This is my channel that I love because it talks about the bigger ideas about finance and money and, credit spreads and credit, all those things, those big macro things, jobs numbers, stuff like that, and how they actually affect what's going on and compared to what people think and what they really do, stuff like that. And of course, risk management, all these other things there. So we do have a ton of stuff there, guys. Lots of stuff going on. We'd love for you to be in there, all right? So if you get the chance, join us. If not, you guys know I'll be back here Monday at 11 a.m. Central Standard Time. Just as a heads up, guys, next week we'll do Monday and Wednesday. We won't have a Friday show because, again, TWC offices will be closed for the sometime Wednesday through the end of the week. And then we'll be back that following Monday. So there you go, guys. That'll be it. I hope you guys have an amazing day. Last Samurai, thank you for the kind words. I really appreciate it. We try to be a little bit different here. We don't just try to emotionally cheer on or degrade things. We try to really talk about all the logical aspects of things that are going on. And that said, with all of that, again, guys, it doesn't mean I'm going to be right. But the one thing you can be assured about is, at least if I'm saying something, it's because I've got this, the education, the experience that I do. So I'm it's coming from somewhere that makes sense. And so there is that. But it's always about learning how to understand markets and figuring out where those, those validation, invalidation levels are. If you're doing that and you got your risk management down, guys, all you got to do is get your emotional stuff going on, get it under control, and you have so much more profit potential. So there you go. All right, guys. Y'all take care. Remember, the only thing you control in the market is how much you lose. That's it, guys. It's all about that risk management, right? You guys have a great weekend. I'll catch you on Monday. Take care.